July was a month of two halves. The first saw US equities reach record highs and global bonds performed well. But halfway through the month, equities began to fall and we saw significant losses from the Magnificent Seven. Today, I'm joined by Baylee for our usual month-end episode, where we try and summarise everything that happened in markets in the previous month into three key themes. So, Baylee, what were the three themes for July?
The same themes really have driven markets since the start of this year. That's the performance of the Magnificent Seven, expectations around interest rate cuts from central banks, and thirdly, politics and elections. But as you've said, sentiment in the market has flipped. It's flipped in the middle of July, and the narrative around some of these themes has actually changed quite a bit, particularly for the Magnificent Seven and equities.
Okay, well, let's start then with the Magnificent Seven and equities. What changed?
The month actually started with the Magnificent Seven actually reaching an all-time high. That was on the 10th of July. But shortly after, there was quite a significant rotation out of large tech stocks and into kind of more small cap stocks. By the end of July, the Russell 2000, which is a US small cap index, was up 10.2%, and the Magnificent Seven were down 0.6%. So quite a big difference there. And there are a few reasons for that rotation. The first is that there was a weaker than expected US macro and inflation data release, which increased expectations for interest rate cuts from the Fed in September. And small cap stocks would be expected to benefit more from interest rate cuts because they have more debt than the large mega caps. The second is from that valuation perspective. The Magnificent Seven were up over 50% since the beginning of the year, and investors are simply taking profits. The beginning of this rotation also coincided with the start of Q2 earnings season, and there were a few disappointing results that cast doubt on the massive rally in tech stocks since the start of the year.
Okay, so there are a few different ways to explain the rotation. One, though, that you mentioned was increased expectations for interest rate cuts, and that's also another key theme for the month. So what caused expectations to change?
It's all about the data. The US jobs report showed the unemployment rate moved up to 4.1% in June, and that's the highest level since November 2021. But what really drove those expectations for rate cuts was the latest US CPI, the inflation report, because it was the weakest monthly core CPI reading since January 2021. So that led investors to significantly dial up their expectations for rate cuts this year. And by the end of the month, the market was fully pricing in an interest rate cut by the September meeting, and Powell, who is the chair of the Fed, seemed to be confirming that at the press conference for the July meeting, and he said a reduction in our policy rate could be on the table as soon as the next meeting in September. And it's a similar story in Europe too.
Okay, so we're probably seeing a cut from the Fed in September, maybe another cut from the ECB as well. So that kind of explains why government bonds, both in the US and Europe, had their best monthly performance so far this year. So Baylee, what's our third and final theme for the month of July?
It would have to be politics and elections. In the context of markets, it really depends on outcomes relative to market expectations and the impact the incoming party would have on policy and from an economic perspective. For example, July kicked off with Labour winning the UK election with a majority government, but that was quite a widely anticipated outcome by markets, and therefore we didn't see a large market reaction after the result. It had already been priced in. In contrast to that, markets were caught a bit more off guard by the political developments in France and the US, which is why we saw those larger market moves. We discussed what markets have called the Trump trade on a recent episode, essentially that Trump 2.0 could lead to higher inflation and lower bond prices, and comments from his vice president nominee could favour small cap over tech. We saw a bit of a reversal of this Trump trade because the odds between a Trump and Harris presidency are narrowing. We all know it's nearly impossible to call an election ahead of time, but regardless of the outcome, it is likely that we will continue to see some volatility in the lead up to the US presidential election in November.
Yeah, I think it'll be really interesting to see how it plays out. Now, we finish every monthly episode with our stat of the month, which this month is that the Russell 2000 had its largest 1 month outperformance versus the NASDAQ 100 in over 20 years. So it really was a historic month for small cap equities. Baylee, thank you for joining me. August has already gotten off to an interesting start, so no doubt we'll have a lot to discuss on our next monthly episode. Thanks to everyone for tuning in, and we'll be back next week with another interesting topic that caught our eye.